Today in the grain market, corn was steady, even though it did close just a touch lower, but the trend does remain up. The momentum did kind of stall today. It was a relatively quiet day. The USDA report on Tuesday is really what we're going to be looking for, and export commitments are at 91% with many months left to go. That makes the objective for corn somewhere in the $6 range. In options, the at-the-money vol is falling pretty quickly as expiration is starting to approach in the March. But also the May, that also came in just because the market was kind of slowing down. Mainly, when it's quiet, we see these the option volatility start to kind of come in a little bit. But right now, still the March volatility is at 33.3%, which is relatively high overall, but it's down because its high was 37.7%. That gives you a little bit of an idea of where we're at for right now. Now, soybeans were firm all day, and then they closed off a little bit lower as well. But it's mainly sideways trade. Just the ranges have been much smaller today. Just some consolidation's been going on. We're really just awaiting more news, and perhaps just really taking a breather and slowing down, kind of assessing the situation. But it's important not to fall asleep on this because the fundamentals are still very, very bullish. And with the fundamentals for soybeans, there's 97% export commitments out there, and there's still 6 months left. I think that that puts the objective for soybeans at about $15. So even though we were quiet today, that's just something to be paying attention to going forward. Now, the futures open interest in March is 30% over the May, so that means that there's going to be a lot of rolling going on over the next couple of weeks. The option volatility is down about 1%. With March and May virtually the same. I think they're both at about a 26.2% volatility, and that just lets you know that there's going to be a little bit of a changing of the guard as we start to approach the March expiration in about a week. It's important to note also that the July volatility is also at 26%. So it looks like that seems to be a fair value for soybeans right now, but the wings are still up. So the out of the money calls and puts are way high. That's still telling us they're expecting a lot more volatility ahead. Now, wheat was mixed. The Russia policy was somewhat uncertain, and the market remained lower most of the day. It actually finished up a little bit. So outside of that, there really just isn't much going on. Mainly, wheat would be following corn and soybeans, with all things considered. Now, if that happens, that objective for wheat is more about that $7 range. But it did dip and make a little bit of a low before it kind of rebounded today. So that's a little positive as we get to the end of the week. Now, in the options, the March-May volatility spread has kind of flipped, and now the May is over the March because the March had been over for quite a while, only by about 0.5%, and we're still well above that 31% mark. So we've got March at 31.5 and May at 32%, but it looks like already we're starting to move some of the options over into the May, and we're starting to look ahead for the next month. So the eyes now are all on Tuesday's crop report, and then the shift is going to be to the Agriculture Outlook Forum on the 18th and 19th. That's going to be talking about some acreage. So we're going to be focused on that as we go forward.